watching Your Trades right here on ET Now with me, Shreyanshi Singh, and with me I have Priyanka Uppal, and over the next half an hour, we'll take you through the day in trade and what a day it has been for us in trade and tell you what exactly went by in terms of news and updates. So Priyanka, what a day, right?
Absolutely. In fact, we must say that bulls continue to take the charge of the street. But then, of course, some gains got paired at in the last hour. But very comfortably, Nifty hit all-time high. In fact, last hour, we saw that good part of the gains, they got paired. Nifty closed nearly at 22,600 throughout the day, but it had to very comfortably hold on to levels of 22,775, which was the resistance zone also. And, of course, the all-time high. But banks were the clear outlier for the second consecutive day today. In fact, today they did lost the entire chunk of the gains which they had gained today, but the 1700 point of rally which we just saw in last 2 days, the start of the May series, the banks have been on the back of the superior earnings, be it large cap numbers, be it mid cap and PSU bank numbers coming in, finance counters numbers coming in, but then we did saw some nervousness coming in. Maybe it is just right before the FOMC meet, because being a truncated week, when we come back on Thursday, we will have FOMC meet decisions. The outcomes would be here, and then of course we all know that the rate cut hopes which have been pushed off to November, maybe that is creating some sort of nervousness on the markets. But then superior earnings from banks, finance, which kept the momentum high for the markets today. It was a green screen barring IT and metals. In fact, top gaining sectors were all auto sectors were buzzing ahead of the auto numbers. Especially talking about M&M, which launched a new variant of compact SUV, which is considered to be a variant from this space. Otherwise, two-wheelers can also put up a good show. This is what is coming in from the expectation that is building in from the April auto numbers. The one good part, which is FIs have been buyers now after a continuous selling streak of around 30,000 crores of selling. FIs finally turned out to be buyer. The quantum was very small yesterday. Let's see how it pans out to be. But then we see that the FI favorite counters are on a good move today. If you talk about the large cap, these the banks, financials, auto, they are majorly the FI favorite counters. And here the momentum was very strong. The entire space was gravitated and stood tall throughout the day. Power stocks were back in action. PFC, REC gaining more than 6.88% today. And what a stellar move from small and mid cap space stocks like Janna Small Finance Bank, Shreyanshi. The kind of numbers they posted and the reaction street gave.
Absolutely, for Janna Small Finance Bank, the kind of reaction that we saw, and in fact the kind of targets that they also have, makes it sound very exciting for the counter. Of course, in trade today, you did have that counter building on those kind of gains that based off the result. But when you look at the other set, when you look at, say, IOC, what you're seeing is that their profit and margins dipped on a quarter-on-quarter basis, and you did see that stock crack a lot after that reaction coming in terms of their earnings. When you look at Exide as well and Indian Oil, you did see quite some interesting trade coming there. Now, of course, Exide was building on the momentum created by earnings, and you did have Indian Oil and REC as well in terms of earnings reactions. Now, of course, when you look at the stock for Indian Oil, what you're seeing is that there was a little bit of a gain coming in there as well. Of course, REC has remained in focus. But then when you look at the primary market action, that did have a lot of the spotlight today, and you did have J&K India that hogged the spotlight with that 50% premium listing, listed at a 56% premium over the issue price. And that definitely took center stage for us today.
Absolutely. Many days post. It's been a long days that we've not heard much of action from the primary market, but the J&K did a good start to the listing today. But then how do setup looks like now? Starting the May series, we saw handsome gains on banks. But then what do this means when the market did not hold on to those gains? Is it just a profit taking, or do we need to be a little cautious here? Kunal joins in to talk about the technicals of the markets. Kunal, good afternoon. Welcome to the show. What do you make of the levels? Though we did see the all-time high, Bank Nifty, of course, clearly ran 1,800 odd points in these 2 days only. How is the series looking ahead? Are we a little nervous before the FOMC meet? What do you have to say on this?
See, I think the last 2 weeks we've been trading with a good, fair, positive bias for both the indices, Nifty and Bank Nifty. We've recovered almost 3,000 odd points for the Bank Nifty in the last 2-3 weeks, and more than almost 1,000 points for the Nifty. So I think in that aspect we have to look at it that the Nifty's managed to scale past to a higher zone. The Bank Nifty scaled past to a higher zone on the back of some extremely stronger momentum. The market breadth is improving. So you might have those odd days when the Bank Nifty sells off intraday or makes a new high, comes back to a strong psychological mark and retraces from there. But then we have to look at this in the entirety, that in the next few weeks, do we see the Bank Nifty moving up higher? If there is nothing major negatives happening across the globe, then I strongly believe that we should be on path and on course of making a fresh high for both the indices going forward as well. And this uptrend would continue. The only concern with the markets right now is the fragmented approach towards the market breadth, because even though the indices are moving up higher, the number of large cap names which ideally should have participated on the upside, that number is falling down significantly. So I think that's the concern, which could probably stall the momentum of the markets, but the direction is still on the upside.
Well, absolutely. So the direction is still on the upside, but given that, there is still a lot of stock picking that needs to be done, you need to be selective about what you're betting on. Which are the counters that you're looking at in terms of trade ideas at this point?
It makes a lot of sense to now go for stocks which are stable in terms of price trends and not extremely choppy and volatile. So I think that aspect I would pick up two names. The first one is about Laurus Labs, the stock which I recommended in the last couple of days, expecting the stock to get into a flag pattern breakout. It did quite well for itself today. The stock managed to break past above the 450 levels. So would expect this momentum to continue. Targets of 475. Traders could look at a stop loss at 440. And the second would be about Voltas. Apparently the stock has seen a consecutive, I think 6th or 7th day of strong price action. Now trading closer to that 1500 levels. 1470 is where the stock has closed today. So looks attractive for a target of at least another 50 points on the upside. 1520 as a target for Voltas and stop loss at 1450.
All right, all the consumer good companies, especially the white goods, they have been over the moon from last few days. But then Voltas, Kunal is positive that there are some more gains which are left for the two recommendations which are coming in from Kunal. Thanks very much, Kunal. We'll let you go on this. Moving ahead, what is Vijay Kedia's view on the airlines sector? Why is he bullish on Indigo? Let's hear out his rationale behind the bullishness.
We should always keep our aim high, Whenever the promoter of this Indigo sells his shares, I always feel कि share बेचता है ना, मैं ले लेता हूँ सारा
क्या
share.
बात है?
I tell you.
Now we know that who's buying the share in the block deal.
No. I cannot buy because he's selling 2,000 crore, 1,000 crore worth of shares. मेरा औकात उतना है नहीं भाई. So, but always it comes into my mind कि ये share बेचता, मैं कैसे किसको shares ले लूँ. Coming to your point, I feel this is a sunrise sector, yeah. Now, at that time, whatever data I gave to you in 2022 budget day, now everybody is talking about those data. Yeah, 23 budget, I think, not 22, 23 budget. Yeah, 23 budget.
23
Just 1 year.
Yes.
Only 13, 14
Yeah,
months.
23 budget. Yes.
So I think sky is the limit for this company. And it's not a recommendation, but I am holding my shares. And still 1,50,000 crore market cap here. In this economy, now everybody, I have told there is a quote of mine, Nikun, that when luxury becomes a necessity, a big story is there in the making. I think same thing is happening in this airlines industry. So miles to go.
Well, there you have it, the word coming in from Vijay Kedia that he's looking at airlines as India's sunrise sector and sky's the limit for Interglobe Aviation as well. But what else is testing new limits? Well, that's Nifty Bank and a potential new record high in store for the Nifty Bank. 50,000 levels in sight. What has led the banking index to highs this year after year? Let's go across to Sharad to take us through all of those important details. Sharad?
Well, yes, Nifty Bank is in focus and we are all waiting for that to touch the levels of the 50,000 mark. But the question remains is how we have actually done the entire weightage is happening in the Nifty Bank. That is something interesting to know. The private names, of course, on the larger side with SDFC and ICICI Bank contributing almost more than 50% of the total weightage index. That is an interesting trivia. Also, the key level dates where these numbers have actually been touching. Of course, we'll be looking at 10,000 point. It touched in the year 2007. and that's the 11th December 2007 is when the level had touched 10,000 levels. Now also 20,000 levels, if you look at it, it took almost 8 years to Nifty Bank to go for that mark, and then after that, in 4 years, that mark was taken at 30,000, and in 2021, it had touched the 40,000 levels. In the matter of 3 years itself, now we are very close to the 50,000 levels also. Now let's look at how Nifty Bank's earning overall returns has been on a 10-year basis, and this is the calendar year basis which we have taken. And of course, if you look at it, the large numbers are actually coming in for in the year 2022 and 2023. That's where the number coming is on the higher side. Also in 2017, it went up as high as 41%. Also 2016, look at it, that is also where a good growth has come in. But there are certain stocks which the journey has happened from 40,000 to 50,000 or the near the 50,000 mark if you look at it. And the stock returns over here in 2024 so far has been almost 3%. But the stock returns, that is something which we'll be looking out for. And that has actually been, PNB has actually been an outperformer, almost going up 3 times. Strong returns coming in for Federal, SBI as well as Bank of India as well. Also Kotak Mahindra Bank and Bandhan Bank actually coming in the negative in this reason. But ICICI Bank, if you look at it, that has been one of the best performers with almost 54% return. Even the valuations, if you look at it, valuations ranging between 1.4 to 1.7 for the larger names for FY25 on a price to book basis. While for HDFC Bank, AU Small Finance Bank and Kotak Mahindra Bank, the valuations are on the higher side as compared to their peers. Now, what is the triggers for the banks? That is something which we will be looking out for. And of course, last 2 days, the numbers have been very strong when it comes to the overall earnings. Advances have been healthy. Asset quality is still in line till now. And the asset quality, apart from that, NIMs, they have also remained stable. And that has actually triggered a good rally in the banking stocks over the last 2 trading sessions as well.
All right, Sharath, thanks very much. Of course, the superior quality of earnings, which has actually led the gains on the Bank Nifty. But the journey is very interesting from 40,000 to 50,000. Shansi, nearly 30 months it will take. Though we were at the kissing distance, we did not cross this level. But then, of course, this is what is being eyed for May series also. We stay for a short break here. More to come. Once we come back, we'll have more for you on the derivative side and a lot more action. Welcome back. You're watching Your Trades, and now more on the derivative side. We did see VIX spiking up to 5% today, and that's what we saw, that the gains were there. The market lost all its gain. Bank Nifty was 500. It was 500 points plus, but it lost all the day gains today. And the trend which appears to be here for Bank Nifty is mild short built up, and then for Nifty the trend looks a little flat. VIX was 12.8. The active calls we saw. Call writing we could see on the upper strikes like 22,700, 22,800. In fact, 22,775, which is the all-time high, which we touched today, also was a resistance. But one point in time, market did break that. But then now, 700 becomes a resistance per market, the kind of action we saw from the derivative space. And now the support has also risen from the earlier levels. It is at 22,500 and 22,600, where the maximum put writing was seen. So this was more on the derivative side. But what happens to the big story, Shansi, happens to be clearly from the banks and finance today.
Absolutely, and what kind of earnings you've seen, right? Because it's been very interesting, the trend that you've seen emerging, and the one that is shining quite bright is Janna Small Finance Bank on account of their strong loan book that has boosted their Q4 performance. You've also had the fourth quarter profit after tax figure jump 4 times on a year-on-year basis. In fact, we also caught up with Ajay Kanwal, who's the MD and CEO at the company, on their business ambition. And he says that as long as they're able to deliver resilience, consistency and transparency, the bank will remain strong. Listen to what else he had to say as well.
Our growth 6 years CAGR is roughly about 3%. So we don't grow microfinance much. We have actually done most of our allocation of capital and resources to grow secured. And also, when I say secured, it's, we also want to be in the same customer branch, where people were actually coming to us for microfinance and going to other NBFCs and banks for housing loans, some other for gold loans, some other for two-wheeler. Right. So it didn't make sense when you're a bank. You really want your customers to go for a few products somewhere else and not come to you. So now we operate a full suite, from a savings to a current to a fixed deposit, and the whole suite of asset products. I want predictability, I want resilience, and I want a no-surprise bank. So that's the start point, which is any investor should look at us and say, that is what he's doing, and the margin of error can't be too much. I don't want to have a very high, even if I do a 18% ROE, but I want to do it steady over the years. No point doing a 24 and then a 15. And that's the kind of book we are trying to build. So that's most important. Second, ultimately it's a customer business, So how do we win the customer mindset? How do we build competitive modes? How are we digital? How's our service? And very important, how are we on governance? I think if you add up all this, then whatever result I'm happy with.
Superb set of numbers from Janna Finance Bank, and management was also very confident that they would want to keep the growth very steady and consistent. Let's go further, talk about a sector which was in top gear today, and the counter especially which showed up the maximum of the gain was Mahindra and Mahindra on the back of the new launch. M&M has unveiled its latest offering, the subcompact SUV XUV 3XO, entering the fiercely competitive segment with a starting price of 7.49 lakh. Rivals like Maruti Suzuki, Brezza, Tata Motors, Nexon and Hyundai Venue in its crosshairs. My colleague Srishti joins in now with more details.
Well, yes, that's the new launch and subcompact SUV launched by Mahindra and Mahindra. That is indeed keeping the stock excited as well. Why not? Because the new launch is loaded with full of features for the company, and a very aggressive and competitive pricing is what the company has done. The XUV 3XO is going to compete with some of the very successful models in the space from the likes of Tata Nexon, Maruti Brezza, Hyundai Venue. And if we see the pricing, then the company has done quite an aggressive pricing, because from all of these models which starts range around 8 lakhs, the company has come out with a price of 50,000 lesser than those, from 7.49 to 15.49 lakhs is the pricing for XUV 3XO. Also, to give you a perspective on the production side, the company did say that in the initial times they have a production capacity of close to 9,000 of units, which is scalable to 10,500 units per month. But just to tell you and give you an industry perspective, the other successful models in the industry from the likes of Brezza as well as Nexon, the average monthly sales run rate is around 15,000 of units. So that won't be a surprise if we get a waiting period for this car as well, because in this price range, a lot of these features in this subcompact SUV is coming in for the very first time, from the likes of ADAS, panoramic sunroof and so on. Other than that, if we talk about the management outlook on this one, so they have also said that the company anticipates the growth in the mid to high teens in the SUV volumes. Now, M&M also aims to be among the top 2 players in the sub-SUV section in the next 3 years, wherein in this space they are at number 5 currently. And lastly, the entire project cost is at 650 crores, is what the company has highlighted. The bookings will open from May 15th and the deliveries will commence from May 26th. So all eyes on the booking numbers when it starts from May 15. But indeed, a very good offering coming in from Mahindra and Mahindra, and hence the stock is seeing no stopping since the start of the day. Back to you.
All right, thanks Srishti for that update. Well, of course, M&M on the back of that exciting launch, and it did have an exciting day in trade, was buzzing throughout the trading session. But which were the other counters then that were buzzing in trade today? Lots of those counters on our radar, and Gaurav is standing by with that update. Gaurav, tell us a little bit more about which ones made it to your list then.
Well, yes. First, let's talk about IOCL, because this company reported weak set of numbers, and when it comes to sequential basis on a Q4 FY24. So net profit was down almost 40% on a QOQ basis. EBITDA margin was down to 5.3%. Although the company gave dividend of 7 rupees per share, we saw a weak momentum coming up in IOCL. Next, let's talk about REC, because this company came up with a strong set of numbers. Net interest income was up 25.4%. PAT was up 33.8%. Even on the NPS front, gross NPS improved almost by 7 bips on a quarter-on-quarter basis. And this quarter, company reported impairment gains of 700 crore rupees, and on back of this we saw a positive momentum coming up in this stock. Next, let's talk about Symphony, because if you look at this company also, it reported strong set of numbers. Net profit was down up almost 200%, and because we saw in this quarter we saw higher sales and lower raw material prices, which aided the numbers for the company, and at the same time we saw low tax expense, which aided the net profit for the company. Another one we have is Exide Industries, because this company we have seen already that this company company has delivered more than 50% returns in the last 1 month. And if you look at the numbers for Q4 also, they remain strong. So for example, net profit actually increased almost by 36.5%. Apart from that, company also gave a strong outlook on the quarters coming ahead. They also said that lithium-ion batteries manufacturing plant will commence on defined time, and that is why we saw a positive momentum hitting up this stock as well. And lastly, let's talk about NHPC, because company is now going to collaborate with Norway company to implement floating solar energy tech in India, and at the same time company will also come up with their Q4 results on 17th May, and on back of this we saw the stock was up almost 3% in day trade. So definitely keeping an eye on all these stocks on the back of numbers as well as on the back of the news flow.
Very much, Gaurav, for that entire compilation. Now, let's go further and talk about the IT stocks. IT stocks continue to be in focus on the back of earnings. Despite muted Q4, they expect growth to improve. Listen in to Birlasoft, KPIT Tech and Zensa Technology. We get your collated view.
So, Aisha, look, from our perspective, I feel financial services will continue to drive growth. Manufacturing has done reasonably well, so that I also feel is sustainable. Life sciences, hopefully over the next 2 quarters with a little bit of softness by Q3, it should be back. So in my mind, all the 4 businesses that we are focusing on will continue to grow. Whatever is the industry average growth, we will attempt to do better than that.
The pipeline is looking solid. It's actually grown quite a bit. And that gives us the confidence that we'll be in the range of 18 to 22% in the new year in terms of growth. So net from our perspective, India is going to be one market that will continue to grow substantially in terms of number of vehicles being sold.
While you might look at year-over-year numbers, I would say that out of the 5 quarters that I have been around, we have seen growth, sequential growth, quarterly growth in 4 quarters out of 5. So if we can sustain that some sequential quarterly growth every quarter, I think we should do better than on the revenue growth side. We should do better than last year. We're looking at doing some acquisitions in the healthcare life sciences space. It's early days, but there's always the gap between the cup and the lip, so to say. But hopefully we'll announce something in the next quarter or so.
All right, that's all in this edition of Your Trades. It's a truncated week. We come back on Thursday, but a lot more action when we come back on Thursday. Shriyansi, let's not forget FOMC meet. Globally, the markets have rallied from January to April. But then this one is a Q factor to watch out, because all eyes would be on what the Federal Reserve Chairperson has to say. For the rate cuts hopes have been pushed on to November. But the commentary is very important. And of course, we have Nifty earnings also.
Well, absolutely. And we'll definitely be keeping an eye on all of that. But with that, we're timed out on this edition of Your Trades on 18 Now. From me, Shriyansi Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning.
If you like this video, then like, share and subscribe to 18 Now.